Usana, making educational videos is a headache. No money. No recognition. And no nothing. If we start writing scripts for ads like Salah Wiap Fatah, performed by Mahmoud Alithi, we would make money and popularity together.
Yamaokas, Yafashal, Mahmoud Alithi is totally supported and backed until somebody else replaces him and he will be left behind, but we are not supported at all. In addition, we have good message to convey.
I know from the beginning that you are Fakria and you will continue to give others even if they see that your videos don't deserve likes and it is too much for you. Okay, let's summarize how we arrived at the $935,000 cash provided by operating activities.
In order to arrive at the net cash provided by operating activities of $935,000, we start with 1. The net income of $690,000, and then add or subtract the following adjusting items. At 2. Depreciation expenses of $290,000, plus 3. Impairment losses of $10,000, minus 4. Undistributed earnings of equity method investment of $15,000, minus 5. Change in deferred tax liability of $50,000, minus 6. Gain on disposal of equipment of $10,000, minus 7. Gain on sale of investment of $35,000, minus 8. Change in inventory of $80,000, plus 9. Change in accounts receivable of $30,000, plus 10. Change in prepaid expenses of $5,000, plus 11. Change in accounts payable of $105,000, plus 12. Change in interest payable of $5,000, and minus 13. Change in income tax payable of $10,000. The product is $935,000, representing net cash flows from operating activities.
I think we can start now with the calculation of the cash provided by or used in investing activities. This includes 1. Cash used in purchasing planned assets, 2. Cash used in purchasing current investment, 3. Cash proceeds from sale of equipment, and 4. Cash proceeds from sale of equity method investment.
As to number 1, the cash outflow to purchase planned assets during year 6 can be calculated as follows. Ending planned assets at cost of $1,730,000, plus planned assets sold at cost of $400,000, minus beginning planned assets at cost of $1 million. Thus, planned assets purchased and paid for during year 6 is $1,130,000. 2. The cash outflow to purchase the current investment is $300,000, being the difference between the ending balance of $300,000 and the beginning balance of $0. 3. Cash proceeds from sale of equipment is $150,000, and 4. Cash proceeds from sale of equity method investment is $135,000. Thus, cash used in investing activities is $1,145,000, being $1,130,000 plus $300,000 minus $150,000 and minus $135,000.
I think we can start now with the calculation of the cash provided by financing activities. This includes 1. Dividends paid, 2. Proceeds from issuing common stock, and 3. Proceeds from current debt.
As to number 1, $240,000 of cash dividends was declared and paid during year 6. Thus, it is cash outflow from financing activities. 2. The company issued 10,000 common share at $22 a share. Thus, $220,000 is a cash inflow from financing activities. 3. The company received $325,000 as a current debt, being the difference between the ending balance of $325,000 and the beginning balance of $0. Thus, it is a cash inflow from financing activities. Therefore, cash provided by financing activities is $305,000, being $240,000 minus $220,000 minus $325,000.
Now we can calculate the net increase or decrease in cash during the year.
Yes, we can, since we arrived at the cash provided by or used in each of the 3 activities. 1. Cash provided by operating activities of $935,000, 2. Cash used in investing activities of $1,145,000, and 3. Cash provided by financing activities of $305,000. Therefore, the cash increase during the year is $95,000. If we add cash increase during the year to the cash beginning balance of $100,000, it produces the cash ending balance of $195,000.
I am sure that our computations are correct, since we arrived at the cash ending balance that agrees with what is provided in the balance sheet. Thank you, Sana.